Hey everybody, what's going on? It is James here with Crypto Common Sense, and I have your Bitcoin / cryptocurrency update for December the 18th. Before I jump into today's content, please do me a huge favor. Go ahead and hit the thumbs up button on this video, subscribe to the channel, and don't forget to click that bell icon to get notifications when I release these daily updates. So what a day it was. It was an awesome day for Bitcoin. It was an awesome day for cryptocurrency. And I was very happy to see this thing finally get this relief bounce that I had been looking for. I had started to get a little bit nervous, starting to think maybe we're getting ready to have some capitulation. I did not take a long position on Bitcoin. No regrets there. There was actually a setup there, but I didn't take it because I was getting ready to go to bed, and I just felt like the downside risk was a little too extreme, so I felt like I'd pass and wait for a better spot to get my money in. So I'm going to talk about what happened on Bitcoin. First thing we can talk about is actually this chart. This is the one I posted about 5 or 6 o'clock this morning. Bitcoin was sitting around $6,600, $6,650 at the time. And basically what I said was, look, even as somebody that's been one of the more bearish people on Twitter the last 6 months, I'm a lot less bearish right now. And this is what I was looking at. There were basically bullish divergences all over the daily chart. Okay, the same thing that we had happen last time we had the big pump back in October, right? We had divergences on momentum, we had divergences on MACD, we had divergences on RSI, and so I just didn't want to short this thing. And of course, hindsight being 2020, yes, it had a huge pump today. It actually pumped up $1,000, right, from around 6,400 to over 7,400, which was a huge pump. I don't know the exact percentage. We can look at it real quick. So it pumped up about about 16%. Huge pump. I think people are kind of downplaying how big that actually was because they're thinking about this pump that happened back in October. But the reality is that is a massive pump. We're talking about a single day candle that pumped from tail to wick of 15.83%. That's absolutely massive. So I'm sure that a lot of late shorts got absolutely demolished today. One of the reasons I did not want to take a long position on that, I'm going to show you right now. And it's one of the reasons that I'm starting to suspect it might not go as high as what I was thinking it might. So this right here is actually one of the reasons I decided not to long Bitcoin this morning. It's because the longs on Bitfinex are sitting up here at an all-time high. And that just did not look like something that I wanted to get involved with, because oftentimes when longs get overextended like this, then you end up getting a big dump, and oftentimes when shorts get overextended, you get a big pump. And this time the longs were overextended, so I have a feeling that this might have been a really nasty bull trap. When it first started pumping up to like $7,000, or when I woke up and it was like 7,200, at first I thought, okay, this is probably going to go ahead and go back up toward that $9,000 level. But I've been looking at the charts now for an hour or so, and I'm starting to think maybe not. So I'm going to walk through exactly what I think might be happening. So again, that's the longs. They're super overextended. You can see on the daily RSI is at 96.21. So I think those things are going to get smashed. And if we take a look at a couple different charts here. So this was the 61.8 fib of this entire move from the 10.5K down to 6,400. This lined up with old resistance / support, all that good stuff. But I don't think we're going to get there. Okay. Let me show you this chart here and kind of show you what I was thinking. So this is what I was thinking, right? I thought we might get it all the way back up to here, specifically because it indeed was support flipped resistance, and it also lines up quite nicely. The 200-day moving average is up there. But to get that high from where we fell to, we'd actually have to pump 40%. Now, we've done that before. We did it back in October, so it's not impossible that happens, but I think it's unlikely, and I think one of the only reasons it got that high in October really was that China news. We already had a pump that was setting up on the chart, and I think that China news gave it that little extra momentum to get all the way up to that top level. So when I really drill into this thing, I almost, if I use a daily chart and we draw this thing down from the top to here, this actually did hit the 61.8, right? And then if we draw it down from the next swing high down, this one hit the 61.8. The first level that didn't tag a 61.8 retracement was this level right here around 9,600. So if we draw that down to our low, That puts our 61.8 Fibonacci level at 83.89. And if that's the case, let me show you something about that number. Remember that number, right around 8,400 bucks, okay? Look at where our daily average is on the CME. This is our 200-day moving average on the CME chart. It's sitting right at 82.80. And I talked about this a couple weeks ago, saying that we may come up and retest this 200 instead of the 200 on the other charts. And I'm starting to wonder if that might be what's going to happen, okay? I'm not in any kind of long positions. I'm not going to go long on it, even though I think it probably, has a good chance of pumping up a little higher. I'm definitely not going to long it. I'm going to wait to short it unless something drastically changes. But I would like to see how it acts if it gets to this level first, and if it can move past that level, then I can start thinking about that $9,000 to $9,100 level, and maybe even a retest of the 200-day moving average. One thing to keep in mind on this is it did tag the smaller 61.8 from this swing high to this swing low. You can see that it was almost a perfect touch right there before it started to pull back some. So keep that in mind. However, when we go look at our bigger charts, like here's the weekly chart. Remember in yesterday's video, this thing was tucked down underneath that red line of support. And I said what we would want to see is a tail form, and that it could, then tuck back inside the box. That is exactly what it's done. And historically, when it's got down to that level, it does tend to move off of it pretty strong, back toward the top of this box. So if that happens, again, that would support this idea that we're going to pump up to 8,300 or even possibly 9,000. So that's one thing to keep in mind. Also, if you look at a 3-day chart, this is a 3-day chart here, you can see that it was a perfect touch. When that candle closed yesterday on the 3-day, it was a perfect touch of the support. And that was one of the reasons that I wanted to go long. But again, I got scared off because of the way the longs were stacked on Bitfinex. Probably shouldn't have longed it, really. But this did pump up off of that support, and it came up on this wick. It was actually tagging this blue resistance, and right now it's stayed underneath that. So if it can break through that level of resistance, that would give me more confidence that it was going to run up toward the top of this box. If it fails to break through it, it could be that it's going to turn south and come back down toward the bottom of this box. And let me show you the trend here. If this is our trend, realistically what we did was we found support on the 78.6 level, and we bounced up and we just tested the 61.8 from underneath. So it's possible that this thing, if it doesn't move up, that it might actually just go ahead and move back down toward the full trend extension, which will be right around 5,500 bucks, and that this RSI just comes right back down to the bottom of the box all over again. Okay, that's absolutely a possibility. We did have this 1 hour gap on the CME chart, right? It was sitting right back here. Of course, now on this pump today, we did fill that gap in, so we don't have to worry about that. That's been taken care of. So I'm gonna go ahead and get rid of that chart. And on the 3-day, I'm not seeing it now, I must have closed the chart. But on the 3-day, we do indeed have a wedge forming. Let me get rid of the weekly chart here. I have no idea where my 3-day chart has went. This is it, but my wedge is gone. So we do indeed have this wedge that's forming up, right? It looks something like this. And the top of the wedge looks something like this. Something like that there, right? So got to keep an eye on that, because again, that has a breakout target depending on how you measure it. If I measure this, there's 2 ways to do it. You can measure it. Some people might take this wide part like this. That would give a target up around 10 grand or so. I don't think that's legit. If I'm going to measure it, I'm going to measure it from back here to here. And if I pull that over, that's going to give me a target of roughly 8,500 bucks or so, which lines up with this neckline. So again, I see some reasons to be bullish, but I don't see any setups to go long. So that's the reason that I'm not in a long position. I'm also not in a short position. Overall, what I'm doing right now, though, is I'm just waiting patiently. I'm going to day trade. There should be some volatility coming up. I'm definitely going to be day trading, but I'm not going to chase down altcoins. I want to show you guys a couple of things on alts real quick. If we look at the total market cap for altcoins, I do find this very interesting. So if we're drawing trends on this one, to me, it looks like all this thing did was it had a false break below the 61.8, came back above it, and this looks like a bullish retest right now. Now, whether it is or not, we'll have to wait and see how the daily closes. But it looks like a bullish retest, which would give some credit to the idea that alts might be trying to move back up and retest this next level up here. Now, the reason that's interesting is because if you look at the total market cap and you do the same thing, it's the opposite. It actually looks like it bounced off the 78.6 and then it had a bearish retest of the 61.8, which means that the total market cap looks like it's trying to move down while the alt market cap looks like it's trying to move up. And what would make that happen? That's exactly what would happen if Bitcoin moves back down, right? This looks like a bearish retest of the 61.8. So if Bitcoin decides to come back down and retest this 78.6 while alts are moving up, we'll see altcoins actually gain ground versus Bitcoin. And if we look at our dominance chart, we actually have bearish divergence on the dominance, okay? It's hidden bearish divergence, but it is there. So if you look right here, we have RSI making a significantly higher high, while the price or the dominance, whatever you want to call it, actually made a lower high. So that is actually a hidden bearish divergence because this is a downtrend. You have it making lower highs, lower low, lower high, lower low, lower high, and then it kind of flattened out right here. But technically, this still looks like a downtrend to me. And so I think this could be, I do think it's up for argument. It's a gray area, but it does look like hidden bearish divergence. And if that's the case, we might finally see Bitcoin's dominance start to turn south. Okay. I don't think that that's enough to trade off of. I don't think it's a reason to say, you know what, I'm going to go load up on altcoins, alt season, alt season. I don't think there's enough information to say that. I just think it's something to be aware of and to keep an eye on in case it starts to, actually happen. But right now, guys, I'm not going to go over alts in great detail because with this big pop today, they all did pretty much the same thing. Most of them popped anywhere from 10 to 20%. EOS, for example, went up 15, 16%. Litecoin went up over 10%. OMG went up over 10%, right? Most of them had these big pops. When I went to bed this morning, Ethereum was sitting around $118. And then it ended up popping all the way up to $135, right? Look at that. So what was that? That was about 16%. So it just moved with Bitcoin. But a lot of these alts, they had these huge pumps. And now it's just a case of it's time to sit back, let the dust settle, and see what happens. I don't think it's a good time to go into the chart and try to do technical analysis because we just had this big move. So obviously, we're moving down now. But that might just be people taking profits, or it might just be that this move is over, right? Like, for example, if we look at Ethereum, and I haven't even looked at Ethereum really in detail, but let's look at it real quick. If we take this and count this as our move, look at what it did. It looked just like that market cap chart, right? Down under it, back above it, and it looks like a bullish retest. That's what I'm saying. This looks really bearish at first. It's like, oh God, look at this huge red candle forming. But it's really not bearish yet. Right now, it's just touching that line. It absolutely could be, getting ready to move up further, which is very possible. Okay. So a lot of the altcoins are going to look like that. A lot of these things did have divergences coming in on momentum. It wasn't there on the RSI, but it was there on momentum. Look at this, right? RSI was actually lower here, so no divergence on the RSI. But look at this. Momentum had a massive divergence. So somebody absolutely could have entered a trade down here and popped off 5 or 10% if they were willing to fight the trend. Again, me personally, I was not willing to fight the trend mainly because of those Bitfinex longs. Hindsight is always 20/20. And even though the general rule of thumb is you don't fight the trend, I gotta say, with all the different divergences that were there, with my 3-day chart being so accurate over the last 3 or 4 months, with it being on weekly support on the weekly chart, with the weekly RSI and all that stuff, yeah, 2020, I probably should have took the trade. And realistically, what I should have done is I should have got into that trade. Let me turn volume off so you can see this. what I could have done is I could have got into that trade at right around 64.30, which would have been way down here. We'll go to an hourly chart. You'll be able to see it. This was, get rid of this stuff. There was actually a fairly big bullish divergence, and I did see it. It was right before I went to bed. My thing was, I thought, you know what? I'm going to bed. I'm not going to mess with it. It was a little bit of a cop-out, honestly. I thought, yeah, I'll just, I'm going to bed. I should have stayed up, realistically, because I could have entered right here, right at the bottom of this red candle. Yes, it would have been about a 1.68% drawdown, but on a swing trade, that's not bad at all, right? And that thing went up 13.8%. Even if I was still in the trade right now, I'd be up, about 9.6%. So would have been a really good trade. Would have been the type of trade that I might have wanted to do, like a 5% trade, meaning that I take 5% of my portfolio, put it on that trade with like a 5% stop loss. Then if I'm wrong, it's only about a 0.25% loss of my entire portfolio. And if I'm right, then I can make, 0.5% or even 1% on my entire portfolio, which is a massive trade. That ends up being a 20% trade to be about 1%. And on a 10% trade, it's about 0.5%, right? Again, of my entire portfolio. That's a huge deal. So, yeah. Hindsight being 2020, like I said, probably should have took the trade, but I didn't. But, how I just showed you guys that all those alts, a lot of them look like they're having those bullish retests. Bitcoin looks the opposite. This 71.98 was an area of resistance, and look what it's doing. Back underneath it, and now this looks like a bearish retest. Okay? So, very, very interesting stuff on Bitcoin. With all that being said, I know some of you have asked about specific alts. I will get to those. Let's let the dust settle first and kind of let the stuff play out. Don't forget that there's always more trades. There's no reason to chase anything. A lot of people get caught up in the FOMO, either a short FOMO or a long FOMO, and it's just not worth it, guys. This is so cliche. It repeats itself over and over, and there's always going to be more trades. Perfect example is this is Link. Everybody knows that, a lot of people were super excited about Link. It was the next great thing. Somebody asked me to do an analysis on it. I did it back on December 10th. I said, hey, look, it's testing the 200 daily moving average. And when it closed underneath it, I said, look, I want to short this thing. I even bought Bitcoin and put it on the exchange so that I could short Link, only to find out that Bybit doesn't have Link and I couldn't short it because I can't trade on Binance futures. For those people that did take a short at that position, that was $2.17, and Link ended up falling 26.5%. It's not that I had a crystal ball. It's not that I'm some magical guru. It's not that I'm some kind of, savant with trading. This was basic textbook stuff, right? Bearish retest of the 200-day moving average, pretty cliche, okay? So these trades exist in the stock market. They exist in crypto. They exist in Forex. And it's just a matter of being patient and not chasing. The one thing I was thinking about this week is I've got new students in this trading course that I'm doing, and they have a lot of questions, which reminds me of what it was like to be new. And it reminded me of playing poker. Back years ago, back in 2006, I spent about a year playing online poker for a living. That's what I did for about a year. And when I first got to playing poker, I would lose a lot of money because I wanted to be involved in all the hands. So even though I might not have the best two cards to start with, I played No Limit Hold'em is what I played. So you got two cards to start with. And even though, the two cards weren't the greatest, I'd often go ahead and bet anyway. And what I would find is, it's when I played those bad hands that I got myself in big trouble, because I'd get like a low pair or a small pair and I'd overplay that hand and I'd end up getting busted and losing a lot of money. And so what I found out was the longer I played and the better I got, I actually played less hands of poker. I would sit there sometimes 10, 15, 20, 30 hands without ever actually playing the hand. I would just be, paying the blinds and whatnot. And I became very, very selective about which hands I played. And when I did that, I became one of the top 50 players. At one point, I was ranked in the top 50 players on a site called Bodog.com. This was in 2006. And I was a top 50 tournament player on that site. And it was because I was super selective about which hands I actually played. Trading is the same way. Don't worry about being in 100 trades a month. You can actually make a full-time living, depending on your budget, depending on your position sizes and stuff like that, doing one trade a month, right? Wait for the perfect trades and don't chase. Chasing is how you get busted. So like today, Yeah, I could have went long and made a bunch of money. I didn't. So what? I didn't lose anything. With all that being said, please remember I'm literally some guy sitting in a spare bedroom. So nothing in this video is financial advice. Nothing in this video is trade advice. You should always do your own due diligence and seek out professional investment advice before making any type of investment in cryptocurrency. If you enjoyed the video, please be sure and give it a thumbs up and subscribe to the channel. Don't forget you can check the description for links where you can follow me on TradingView, Twitter, where you can join my free Facebook group, and also where you can join my paid trading course where I teach you everything that I personally know about trading. And I promise you, if you go through that course, especially if you're a beginner, you will never look at markets the same way again. This is James with Crypto Common Sense. Trade safe.